Sure, so it has definitely been warmly received by the market so far. The big challenge or the big opportunity for Pinterest is international monetization. If you look at their audience, they're about 30% US, 70% international, but their monetization is 94% US, 6% international. So the question is, on a near-term basis, how much are they going to have to invest in the platform to improve their international monetization? So you talked about their ARPU. The question I have is, what was international ARPU, and to what extent did that grow in the quarter? That'll be the number I'll be looking for on the earnings call later today.
And Tom, I mean, how confident are you that they can build that international ARPU, average revenue per user, to catch up with the US number?
So to the extent that I have a neutral rating on the stock, I am not confident. So I think that what you've seen with Pinterest is they've done an excellent job building a global audience. They've done a fairly good job monetizing the audience in the US. They have a lot of room for improvement for international. To the extent I see improvement, then I might reconsider my rating, but I do think it's going to be difficult for the company.
What stands out to you, Mike? I mean, this is a stock that's up, what, 50% from its IPO price? First quarter earnings, always a key test.
I was going to say, my first observation, this is not a company that's practiced in managing expectations of the street. Remember, the IPO priced at $19. As far as the company's concerned, that's the price they debuted at the public. It ran from there, and that's why some of that premium has to come out, because it's a little bit of a stumble when you talk about some of the key metrics.
And revenue beat, so the EPS could be some kind of one-off cost.
Still growing 54% revenue
into the numbers. Exactly. Tom, how do you work out valuation, given that you just kind of put this at hold? What's it trading at, and how steep is it?
So the good news for Pinterest is it's an advertising-based business model. So similar to Roku, I think this will have a fat margin over time, call it 35% adjusted EBITDA margin. The question is, how quickly will it ramp to that big of margin over time? And then again, how will they do on international monetization? On a EV to sales basis, though, it's quite expensive, well north of 6 times. By way of comparison, Roku's more like 4 times. So it is an expensive stock.
Were you saying you were looking for their revenue growth internationally, Tom? I mean, it looks like it was 100%, 107% internationally versus 50% domestically, and that's certainly where the user growth is as well.
So that, I would say, if those are the numbers, then that is encouraging. You did see a slowdown in their average revenue per user for international audience in 2018, which was consistent with the rollout of GDPR. So the fact that they're able to reignite that is encouraging.